Good afternoon, I'm Bridget Taylor and this is Currency Wars. Welcome to our new live slot. Due to popular demand, we're right before power lunch. Well, let's have a look at the key highlights from the last week. The Rand's traded weaker on the back of global drivers, trading between 10.88 and 11.15. Meanwhile, the Purchasing Manager Index data from the Eurozone and China declined, whilst the US PMI data remained remarkably more buoyant in comparison. This highlights the risk to the US economy, as their biggest trading partners remained under pressure. Meanwhile, Eurozone growth was downgraded to 0.8% by the European Commission. This confirmed the OECD and IMF expectations for a sluggish environment in the Eurozone to remain in place in 2015. The gold price has come under further pressure, having lost 13% in the last 3 months. Platinum is down 17% and Brent crude has lost 20% in the same period. Meanwhile, the US continued to be bolstered by positive data, with the ADP employment data printing better than expected. This confirms the US economy is growing more rapidly than the developed market peers. In the week ahead, our main focus will be the non-farm payroll data that's due out tomorrow. After yesterday's better than expected ADF data, markets are expecting non-farm payrolls to reveal a further 235,000 jobs being created in the United States. This further solidifies views that the Fed may be comfortable to hike rates in the US in 2015. The ECB will also be making an announcement post their MPC today, and the market's looking for indications regarding the likelihood of outright quantitative easing being implemented in the Eurozone. This really does highlight the divergence gap between the United States and the Eurozone and places commodity and emerging market currencies under further pressure. Right, let's have a look at how the trading strategy played out last week. Last week, Jan and Danny expected the Rand to remain above 10.85 and trade as high as 11.10, and they were spot on. Well done, guys. With the Rand now trading above 11.10, our accuracy rate so far this year has been 87.5% for the Rand dollar, as you can see on the chart attached. So anybody that took advantage of the views that were shared on the show, I'd like to thank my hosts for their boldness in putting forward their views. You certainly would have come out a winner. Right, now that we've seen the lay of the land, I'd like to welcome my guest hosts, Andre Eerenstein from RMB and Andre Cilliers from Treasury One. Welcome, guys. First live show, so this is quite exciting. Let's look at what's happened in terms of the last week. I mean, the Rand did play right into our hands with regards to trading above that 10.90. It's now broken through 11, it's sitting around 11.15. I think, we did talk about the global drivers being the key in terms of where that's going. So let's look at, with regards to the US data versus what's happening in China and the Eurozone, what are the risks associated to the US data continuing to remain buoyant?
Well, that's certainly one thing that we kind of see, and it's been a theme that we've seen for quite some time, a very divergent economic growth story between Eurozone and the US. Personally, I still think that the Eurozone is going to remain very, very weak. I think we've got the ECB that are announcing today, looking for hints of QE. Again, one's got to look at the effectiveness of it, but that's a different debate altogether.
Yeah.
But, I still think that the US is going to continue to outperform. For how long is going to be a question. One's got to ask, how long can the US outperform the rest of the world?
Well, this is the thing. I mean, if we look at the knock-on effects, so if we look at, if we go back in history and we look at what the United States did with regards to quantitative easing, very effective. They are managing one country, though. When you look at the Eurozone, it's like herding cats, right? And then they were very, very good about putting in things like their austerity measures, managing debt, etc. But the quantitative easing didn't come in, and we've seen policy decisions being waylaid because of these political pressures. So if we look at China and Eurozone, I mean, this plays into the South African scenario as well in terms of opportunities for growth, the sluggishness remaining in 2015. What is your view, one, with regards to the risk with regards to the data that's been so buoyant in the United States and the knock-on effects in South Africa?
Bridget, I think that if we go forward, the sluggish growth in the world, the continuous downgrades, the lowering of growth forecasts for China, the Eurozone, that as much I would like them to be decisive this afternoon, I think we're going to have another undecisive speech coming forth from them. Yeah. And I think the strong dollar, weak euro area is going to impact on going forward the growth figures coming out of the United States. And
Yellen mentioned that
yes.
at the last FOMC. She was quite hawkish about the economy, but she did mention, well, she didn't actually mention it, but the market considers the fact that these knock-on effects are going to play into potentially seeing a weakening of this bolsterous data that we've seen out of the United States.
I don't think that the data coming out would be so much weaker, but I think let's call it the incline of the figures, the growth figures, with the momentum of the figures would slow down, and that would push out and make them a little bit more cautious on interest rate moves going forward.
Well, that's the thing, and I think that that's been the big key. If we look at where we are sitting at the moment, I mean, a lot of decision really results around how are growth curves looking across the globe. So if we look at South Africa specifically, we've seen our growth deteriorate. That's largely as a function of our trading partners also being under huge amounts of pressure, as well as our own fundamentals. However, the rand has predominantly been driven by global factors. So if we look at things like this slowing down of the growth curve, that's had an impact in terms of the commodity prices. So let's look at what's happened in terms of our resource sector. We've looked at the gold price, the platinum price, and the Brent crude price, all deteriorating. Yes, that's good for import costs into South Africa. However, we are an emerging market currency that's based on the commodities, right?
Well, we have a big current account deficit, and one of our major exports are commodities.
Yeah.
So the price of those commodities continue to drop, and our growth prospects continue to drop. It doesn't bode well for our current account deficit, and that's going to pose a problem for the rand. Whether it materializes in the next month or next 2 months or next 6 months, remains to be seen. Timing is very hard to call, but there's no running away from your weak fundamentals.
Sure.
Turning to the Fed, you look at, the Fed governors are looking at several factors in terms of not just economic growth.
Yeah.
I think the one thing that really is a concern for the Fed in general is U.S. wage growth.
Yeah.
As long as you don't have U.S. wage growth, then the Fed is going to be very reluctant to start hiking rates.
Well, for sure. They don't want to put added pressure onto the consumer. And I mean, we've seen that in South Africa in terms of cost push pressures, in terms of disposable income. But coming back to the commodities, I mean, if we look at gold specifically, it's not necessarily traded as a hard commodity. It's traded as a hedge against inflation. Obviously, at the moment, inflation in the globe is something that's almost benign or non-existent. It's not something that people are concerned about. Although quantitative easing by economic standards should in fact drive inflation, but we're not seeing that. So what is your view in terms of commodity prices going forward and what that can mean as an indicator for where we can expect rand to trade? Andre, if you want to maybe jump in here.
If I jump in, then I'm going to say commodity prices is in for a hard time for the next year or two.
Yeah.
Our resources index over the last year, we can go and look, is down 24%. Yes, that's been hit by strikes as well. So that might slow down, the decline might slow down a little bit, but with growth prospects in the world, very benign and negative outlooks, commodities is going to be hard hit over the next year or two.
And what do you think the impact of that is going to be on the rand?
Well, it's going to be a dollar story, and I think if it's to strengthen the dollar, I think the rand's going to be very vulnerable, and I think it's quite possible that if we look at the dollar index now, yes, it is at a historical, at least medium-term high. I still think that there's room for the dollar to strengthen over time because it is, at this point in time, it is still the strongest out of all the G7 and some emerging markets.
Without a doubt. I mean, we've seen the dollar and the US economy growing. So whilst inflation is on the back foot, we can expect commodities to come under further pressure. Obviously, that's going to put pressure on our funding of our current account. Just from a perspective of exports, in terms of imports, obviously it's cheaper from an oil price perspective. However, that does potentially put some pressure on the rand. So what we're going to do is I'm going to put you on the spot. So I want you to look at the crosses. We were talking about this earlier, offset is around the euro rand. The euro rand is a bit of a conundrum purely because of the fallout in terms of what's happening in the Eurozone on the back of this dollar strength rally and what that means on the cross rate, because that's where the conundrum lies. So when we come back in a sec, I'm going to ask you for your views. If you could share dollar rand, euro rand, as well as the pound rand, I would appreciate it. Right, now that we know where we stand and the risks and opportunities, it's time to pull out the big guns. So guys, I'm going to place you on the spot. I'm going to start with you, Andre. Do you want to give us a view in terms of where you're comfortable to put it on the block?
Well, I think dollar rand is going to be between 11 and 11.20.
Okay.
I think when we look at flows, at least for the short term, I think there were quite a few offers around on the 11.20 route. So I think 11.20 is a good range.
Okay. And Andre, do you want to give us an overview in terms of the crosses as well?
Yes, the dollar rand, I'm going to say that now that it's broken the 11 to 11.25 area. On the cross rates, I think undecisive move by the Europeans this afternoon puts pressure on the euro. I think euro rand lower, most probably around the 13, 17 to 14 level. but favourable to the 1370 end, and the pound in the area of 1760 to 1775.
Fantastic. I really appreciate that very much. Thank you. So we're going to wrap that up. But in conclusion, the trading strategy for the week ahead is to look at the rand remaining above the 11 level. We're expecting it to trade as high as 11.20, potentially up to 11.25. On the euro rand, however, dependent on the decision this afternoon from the ECB, we're likely to see a trade between 13.70 and 14. However, the trajectory is towards the 13.70 level. And then on the pound rand, a similar scenario, also looking for further strength on the cross. If you'd like to send us any questions or comments, you're welcome to do so at CNBC Africa, #CurrencyWars410, or myself at Bridget R. Taylor for your own personal responses to the FX markets. Thank you for the show today, guys, and until next week, good luck in the trenches.